Greece's debt crisis is hitting global equity markets. European stocks are down in morning trading hours. The U.S. markets plunged on Monday. The Dow fell 350 points to close at 17,596. The slide made for the worst day of the year so far for the U.S. stock market. Peter Schiff is the president and CEO of the global investment firm Euro Pacific Capital, joining us from their headquarters in Westport, Connecticut. Peter, good morning, and thank you for being on the program. So Greece appears to be on the brink of default. Asian markets rebounded this morning. Europe seems mixed. What should we expect at the opening on Wall Street?
Well, I think stocks are probably going to open higher, but it really doesn't make much difference how they open. It's more important probably how they close. But, I don't think Greek default in and of itself is that big a threat to the United States. In fact, I think the anxiety over the possibility of a Greek default or a Grexit, Greek leaving the Eurozone, has actually helped the U.S. by attracting money to the dollar. And I think that any resolution of the Greek crisis, even if Greece leaves the Eurozone, will be positive for the euro and therefore negative for the dollar, which will hurt the U.S. economy.
I don't want to get too into the weeds to this, but in moments of uncertainty, don't people flee to the dollar? Doesn't that lead to a stronger dollar? And couldn't that, by turn, impact imports down the line?
Well, that's my point. If we remove the uncertainty, if we finally have a resolution one way or another to the Greek situation, then that's some uncertainty that's no longer there, and that will work against the dollar. Although one day people will realize that there are more problems in the United States. I mean, if you look at Greece, we're just as broke as they are, and we're just as unable to pay our debts. The only reason that we can is because the Federal Reserve is printing money and making it possible. But one day that's going to cause a dollar crisis, and the game's going to be over here, too.
So you're saying the focus may be in the wrong place. The market seemed to think that, too. There was some selling, but there wasn't panic. Why didn't we see that? Was it already baked in, the uncertainty?
Well, I do believe that most investors still think the Federal Reserve has their back, and unfortunately, they're probably right. I think the Federal Reserve always keeps an eye on the markets. It's one of the bubbles that they've filled up with a lot of air, and if they think the air is going to come out, they're ready to blow it back in again. But, don't overlook the problems in Puerto Rico. Everybody was focusing on Greece. We've got problems in our own backyard, which I think are much more problematic given the enormity of the problem and the number of Americans who own, either directly or indirectly, Puerto Rican government debt. This debt is not going to be repaid in its entirety.
Do we think that there's a lot of exposure to Puerto Rican debt? Because a year ago, people were already talking about problems in Puerto Rico and their ability to pay debt.
Yeah, well, some of this debt is now owned by hedge funds, but a lot of it is still owned in mutual funds. All of these municipal bond funds were attracted to Puerto Rico because of the higher yields. And Puerto Rico is triple tax-free in all 50 states. So these portfolio managers peppered their portfolio with Puerto Rican debt to benefit their yields. But, of course, they took on the risk. Well, no one seemed to care about the risk because they just were chasing yield. But now it's going to come back and bite them, and this is going to mean losses for a lot of people who own these funds.
What do you think should be done about Puerto Rico? Washington has so far said, don't expect a bailout from us.
Well, Puerto Rico is a perfect example of how the minimum wage can help destroy an economy. The federal minimum wage in Puerto Rico at $7.25 really is effectively like $15 an hour. That's why they have 20% unemployment. It is, it's very difficult to get a job in Puerto Rico. And of course, being on welfare in Puerto Rico is more lucrative than getting a minimum wage job. So it's very hard to entice people into the workforce. Employers can't afford to hire. Then you've got the Jones Act, which unfortunately makes it very expensive for goods to be shipped in and out of Puerto Rico. So the United States has hurt Puerto Rico, but one of the ways we've really hurt them is by encouraging all the borrowing. Because when the Federal Reserve kept interest rates too low, it created a lot of demand for higher yielding Puerto Rican debt, and that enabled Puerto Rican politicians to keep getting reelected by promising something for nothing. Well, that you can never get something for nothing, and the bills are coming due, and unfortunately, Puerto Rico can't pay.
Peter Schiff with Euro Pacific Capital, thank you for your perspective this morning.